Good morning, Chris Beach, and welcome to Charting the Markets on IG Live. And as we head into the final session of the week, after a very strong week for global equity markets, we await the latest US payrolls report. It's been a busy week. We've had the Fed decision on Thursday, which saw rates unchanged and perhaps a more cautious view enunciated by Chairman Jerome Powell. You had, of course, the Bank of England rate decision yesterday, which was a slightly, probably more hawkish one, a hawkish pause rather than the Fed's dovish pause, I think is how markets are reading it. And Apple earnings last night, forecast for iPad sales cast a bit of a pall over what was otherwise a fairly good set of numbers from the tech titan. And then its payrolls. So we're expecting about 180,000 jobs to have been created and unemployment rate in the US to hold at about 3.8%. So the strength of the US economy is still a remarkable thing. If you'd asked people 2 years ago, the Fed had raised rates to their highest level in 15 or more years. They've gone to 5% plus. What would happen to the economy? Most people would have said, again, would have said, well, it'd be a recession, and it hasn't happened. And job growth remains solid. US economy is as near as you can be in that kind of world to full employment. 3.8% unemployment rate is very, very strong. So that's underpinning everything the Fed says and does really to strengthen the economy. It does give them room, I think, to increase rates. Another strong payrolls reading today could actually maybe see some trimming of gains in stocks, which do remain sensitive to the prospect of more rate hikes, and could push the dollar higher once again. So do bear that one in mind. But overall, it's been a very good week for stocks. It's been a very solid overall performance. Fears about central banks, indeed, fears about central banks have receded quite a bit. Now, we've certainly heard this before, where people think that they're done with their rate hikes, and yet there's more to come. So there's still a risk that they could go back to hiking rates, certainly. But at the moment, there's a hope that the Fed and the ECB and the Bank of England have paused. Now, next week, we get the RBA, the Australian Central Bank, and expected to raise rates again. So that could be unsettling for markets. But certainly at the moment, the perception is generally that most central banks are done with their hiking for the time being. Otherwise, it's a fairly quiet day all round, not much moving across the board, although we've seen some dollar weakness ahead of those payrolls with the euro, the pound, and indeed the yen making some gains against US dollar. Of course, all eyes in the yen this week, having breached that 150 level. It's come back from its 1 year high above 151, but certainly still sitting there above 150, almost daring Japanese Ministry of Finance to intervene at some point. So bear that one in mind. Otherwise, oil prices slightly under pressure again this morning. Gold, meanwhile, edging higher once again. Starting with the indices, though, we'll start with the FTSE 100 as ever, currently trading at 74.46. And after the huge gains we've seen this week, and this applies to all three of the indices we'll look at this morning, but after the book gains we've seen this week, it's not surprising that Friday's just begun with a little bit of, call it profit taking, call it what you want, just some caution in stocks. It's not even really particularly caution. It's just a recognition, I think, of the huge gains that have been made this week that have restored the situation in some ways for equity markets, and not entirely. For the FTSE, once again, it's this big zone of support around 7,300 or just below 7,300, in fact, that has acted once again. So just as it did in early July and into August and September, get down to 7,300, 7,280 or so, buyers step in. And that's generated a similar bounce to what we saw in July and August. Question is now, does it get back to 7,700 highs that we had again after those rallies? Within a very short space of time, it went back to 7,700. It took us about 15 days to get in July, and it was about 25 days, in August. So that would kind of put us towards the end of the month either way for this rebound. But it'd be interesting to see if and when it does get to 7,700, whether the index does start to come under pressure there in the short term, whether over the course of time it then does have the ability to push on from there. We're looking into the DAX, back at trend line or nearly back at trend line resistance as well. And this is, I think, important to understand that while indices have had a very strong week, they are still in downtrends, very much so for the DAX here. The downtrends from that record August high still in place, lower highs and lower lows. So as we were saying in our morning updates, it's just the risk that it could get to sort of 15,250 and then falter and drop once again. So we're not saying that the pullback is done, that the losses of the past 3 months have come to an end. But at the moment, this impressive rebound still lies in rebound from lower low towards possible lower high territory. And until we get, for the DAX, until we get back above 15,600, we'd have to be a bit more cautious about that, really. I think over the course of time, it could be proven that we then start to steadily rally. And of course, we are into November, December. Traditionally, very strong months for equity markets. So that could just propel things a little bit. And of course, that's just what the average tells us. So we're not saying it will happen this time, or there aren't reasons why it shouldn't happen, because every time I bring up seasonality, someone always says to me, oh, well, what about this, that, and the other? Yes, but the point is we're just looking back at the average of what markets have done. And on average, especially in years like 2023, where you had a very strong first half, it still tends to be quite strong. So just talking away from the charts for a second, if you look at an average year, a year like 2023, where you have a very strong first half, you then have actually quite a weak period from August right up to the beginning of November, and then it rallies again. So this is exactly on cue what we've seen over the past 3 months in equity markets, is that weakness is just what we'd expect in this kind of year. And then if they were to follow the script for the year, if you like, we then see a continued rally into year end. So for the DAX, maybe it does get back towards 15,700 or so and continues to make headway and recoups its lost ground. As ever, reversal back below 15,000, of course, could then fire up the bearish once more, really. If we go over to the S&P 500 as well, sorry, the Dow rather, we're back at 33,850, back above the 200-day moving average as well. So that's an interesting development, because previously, if it goes below the 200-day, it really has kind of put pressure on markets. But we're back above the 200-day. We're back above the June-July zone, around 33,750 that was support, so that's good. Now we're watching to see whether the index has an ability to close above 34,000. If it does that, that's another tick in the box for a bullish view rather, because that really puts it on above these October highs and back above the late August lows. So that's an interesting and strong development for the buyers. Then it takes us on trendline resistance from the July highs. So a little bit further to go, and we'll be in very interesting territory for the Dow at the moment. As I say, buyers firmly in control, really. You need to close back below 33,500 to even suggest that that rally is run its course, really. Looking at FX markets, the dollar weakening this morning, so that's given the euro a space to rally for a third day. It's not been a bad week for the euro, has to be said, not been a bad month, all things considered, rallying from 104.60 up towards 106.40, but very firmly still in potential lower high territory. What we'd be watching for that is maybe a reversal back below 106, the daily MACD rolling over again, another bearish crossover. That would then maybe give the signal for people to look at shorting into strength rather than buying into weakness, because this is just a counter trend bounce at the moment, which we were expecting to get at some point. I think, as I said earlier in the week, that's the kind of thing people say, we expect a bounce at some point, but you don't know when. Well, we've had our bounce in the euro dollar. It does look, it's not a great bounce, only about 300 points, but it has sort of eased off some of the oversold nature of this market at the moment. So any failure to push on above 107 is a fairly bearish development, I think. And if it gets above there, then we're back sort of into neutral territory. The pound was given a little bit of a lift yesterday by the Bank of England, not very much, but it has managed to move this morning. And this is interesting because we're now back above trendline resistance again from those July highs. So we're doing what the index, or we're trying to do at least today, we're going to close above it, what the pair couldn't do in August and into October, namely close above that trendline resistance. It is just a line, it has to be reminded. It's not set in stone that it has to stay below this, or if it's broken, that it definitely changes the view. It could oscillate around it. Anything can happen in markets. Remember, just because we've drawn a line doesn't mean it's out. It has the strength of Holy Writ, but it is interesting to watch and would give us perhaps something to work with. Further gains that hold above even 121.70, so you can run a fairly tight one on this, that take us back towards 123 would be interesting. If it gets back to there, which is the early October high and the 50-day, and gets above it, then we're moving, similar to what we said with Eurodollar, and moving back into more of a neutral stance here. Even if it rallies to 123 and then reverses again, that really has the sellers the advantage, arguably. But it's important to keep an open mind with this. It's very easy to look at a chart and begin to project what you think should happen next. Almost everyone does that, really. I think this should happen because we always find a reason, and the market's invariably surprises when we look back. So just be aware of that. But at the moment, buyers edging this one higher, but still very much potentially lower high territory. We have to keep an eye on dollar, although it's not moved very much the last couple of days. Tuesday's huge move through 151. It really was, I think, the Bank of Japan delivering a clear message saying, the market delivering a clear message they were prepared to push this high. We've yet to have the response from the Bank of Japan or the Ministry of Finance about an intervention, because this was the area they were watching. We got so close to, if you zoom out all the way back to last October's high at 151.94 within a whisker, but the uptrend still very much intact. We've not even moved below the 50-day moving average since late July. So a very steady, very solid uptrend with some volatility, but overall still looking to make further gains, I think. But if we're looking into next week, we're above 150. So long as we stay above 150, there's always that risk that the Ministry of Finance will do something to strengthen the yen and cause this one to drop. So do bear that one in mind. And finally, turning to commodity markets, gold prices holding up very, very well around the 1980 level after dropping back at the beginning of this week and right at the end of October, of course. But overall, doing much better than anyone thought, I think, would have been the case. Maybe we're stealing ourselves for a pullback in gold prices. Trendline support, a form of trendline support from the 24th of October low continues to hold as well. So breaks below that would be needed, and ideally back below Wednesday's low to really suggest that a more substantial pullback is in order. That takes us back into the interesting zone around 1947, which was an area where buyers ran out of steam if you look back in September, and also then back down to that 200-day moving average. Otherwise, for the moment, short-term buyers still firmly in control here and heading back towards 2,000 and higher if we get further gains today. As ever, payrolls this afternoon, 12:30 US markets, of course, an hour ahead of where they normally are. But if that strengthens the dollar, you can expect gold to pull back. So do bear that one in mind if you're trading gold. And finally, after this busy week, crude oil right back at one form of trendline resistance from mid-September. So that's interesting because if you look back the last time we rallied sharp in October, then fell back. So will this be a repeat of that? As we say, below the 50-day, which is falling, you've got very weak MACD. Down here, you tend to look into selling. So it shows you the selling momentum is stronger than the buying momentum, even with this big bounce we've had here. So it would be too textbook a move for it to hit this trendline resistance and then sell off, but anything could happen. Otherwise, further gains in the short term take us back on towards 43.90, 44 mid-October lower high. So do watch that. But again, oil prices since July, after a very strong rally, have been in a downtrend, because that is a series of lower highs and lower lows. So that in anyone's book is a downtrend. So until really we get back above the October high, it's hard to say that the buyers are particularly enjoying anything but the short term. So it is payrolls day once again. First Friday of the month, time for non-farm payrolls. Now, of course, US markets had another solid day. The Dow in particular up 560 points, moving back towards 34,000, indeed, with knocking on the door of that today in the futures. But we're looking at a slightly weaker open now for US markets, particularly in the US, in the S&P 500 and the NASDAQ, where Apple results just weighing on sentiment there. The Dow expects to open there around about 7 points higher, really. Yeah, the US 500 and the Tech 100 opening just slightly in the red ahead of those numbers this afternoon at 12:30. Don't forget, 1 hour earlier than all because of the UK time change. We're covering that live on IGTV, of course, as well. But that's it for me. Thank you for joining us. We're back as normal on Monday at 10:30.